Hey guys, it's Wayne. Last time we talked a little bit about life insurance and some of the common terminology, the difference between term life and permanent life insurance. I gave you some stories of people who didn't have insurance and what the consequences were. Basically, people who lied on their application to get insurance and so forth. So we touched on some basic concepts there. Today, I want to talk about who should buy insurance, who should buy life insurance, and basically life insurance supports dependents and beneficiaries. That's pretty much it. It supports dependents and beneficiaries upon the death of the insured. So here's some examples of who commonly would need insurance. So first of all, my thing is I think everyone needs insurance. I probably mentioned this before. So if you're a single person and you have no dependents and no beneficiaries per se, well, guess what? Someone has to bury you, right? You have to get buried when you pass away. So, one of the probably one of the least expensive ways to do that, aside from saving yourself $10,000, $20,000, right? So in case you pass away, and of course, death can be untimely. You don't know when it's going to happen. So, one of the quickest, most efficient way to get that uh, final expense covered is through life insurance. And they typically they call a final expense policy. And that ranges 10, 15, 20, $50,000 typically is the amount to cover that. Your burial, your funeral expenses typically would cost anywhere from 10 to $20,000 depending on how extravagant you want to be. Obviously, if you get cremated, it's not going to be as expensive as if you have a traditional burial. Okay, so with that in mind, just as a baseline, everyone should have some sort of insurance, and I'd say if nothing else, a term life policy. Okay, all right. So aside from that, who else would need insurance? Right. All right. Parents with minor children, obviously, one spouse, or let's say it's a married couple, one of the parties passes away, then you would still need life insurance to cover the cost of raising those children, put them through college, even high school, elementary school, that sort of thing, until they're able to stand on their own 2 feet. So you need a replacement of income. The income that will be lost as a result of one, and God forbid it's the spouse that makes the most money that passes away, then you're gonna definitely need that money to help to provide for those children, right? And so the most effective, most efficient way to do that, life insurance. Okay. Here's another special category of people that need life insurance, and that are parents with special needs children. So if your child is disabled, isn't able to function without you, when you pass away, you need to be able to leave them a nest egg so they can, or someone, their guardian, will be able to take care of them. Okay, so that typically you'll find this done. The death benefit from the life insurance from those kinds of policies being used to fund a special needs trust to benefit that child that's disabled. Okay, and then what about people who are just owning property together? Yeah, if you own property together, you're paying a mortgage. If you're not married, good idea to get life insurance. Why? Well, so that when in the event that one person passes away, you have to force sell that property. And typically, if you have to force sell a property, then you know that you're gonna get market value for it. So to cover yourself on the mortgage, best thing to do, most efficient, most effective thing to do, is to get a life insurance policy to cover both lives. Should in case one of the two parties passes away, there will be coverage to um, cover or protect that lost income. Okay, and the elderly parents who want to leave money to their adult children that have provided their care. So you're an elderly person, you had a child, and rather the child takes care of you because you're so elderly. you may want to have a life insurance policy to defray some of the costs that the child incurred during the period they took care of you. So there's another reason why you should have life insurance. So young adults whose parents incurred private student loan debt. So basically, my son's going to college this year, going to Howard University. Go Bisons, I believe. Actually, it's not. Is it Bison? I think it's Bison. That's their um, animal or whatever. So basically, he's going to Howard. So we're gonna have to maybe come up with someone out of pocket to help pay for that the tuition to go to Howard. So if my son is nice enough, he'll take out a life insurance policy. Well, I have a policy for him anyway that I'm paying. That in case at the time when um, if were to pass away, um, or if the child if he's gonna pass away, or my son's gonna pass away, then that life insurance policy would maybe have me as a beneficiary, right? In the event that he passes away, to cover some of the costs I may incur if I have to take a loan to send him to college. So there's another category of folks that'll need life insurance. Um, so if you want to lock in low rates, if you're young, I always say life insurance is a young person's game. Okay, meaning that the younger you are, the further away you are from mortality, the better your rates are going to be, whether you're male or female. So it's better to take the life insurance policy out when you're in your 20s to lock in the rate versus taking it out when you're in your 40s. When you're in your 40s, you're going to pay significantly higher rates than someone who is in their 20s. Typically, a younger person is going to be more likely to be healthy, right? Typically, I'm not saying every young person is healthy, but typically that person is going to be more likely to be healthy, and they're going to be further away from mortality, as I mentioned before, so their premiums would be lower. Okay. Now, wealthy families who expect to owe estate taxes. Yeah, this is a big one. We know that the estate tax limits have been increased, the exemption amounts, and so forth. They've been increased, I believe, to $11 million per person. So if it's a married couple, it's $22 million. That sunsets in 2026, by the way, when there was that provision of the Tax Cuts and Jobs Act will end. Okay. So, but in the meantime, if you have a significant estate, let's say it's over $11 million, right? You may want to take out life insurance to pay for the estate tax so that the estate itself is remains intact. And basically, it's a good thing because um, the estate taxes could be pretty high, and the cost of funding that policy to pay for the estate tax is going to be way less if you do the math. So that's another reason to have life insurance. Now, businesses that have key employees that if they pass away, they lose that brain power, or that person's contribution is so significant that if they pass away, the company may go belly up. Now, if you have the Keyman life insurance, you can cover yourself or cover the business in the event that that would happen. Okay, so it's a Keyman life insurance. That's typically if the company is the beneficiary, then they pay the premiums and they get a deduction for that too. So that's a beautiful thing. Okay, now, yeah, I mean, married pensioners, instead of choosing between a pension payout that offers a spousal benefit and one that doesn't, pensioners can choose to accept their full pension and use some of the money to buy life insurance to benefit their spouse. The strategy is called pension maximization. Okay, so I'm not gonna go into that too much today. I'm gonna do that another time. But listen, try and make my videos shorter so that I don't get yelled at. So, listen, it was nice sharing this information with you guys. Again, my name is Wayne. I can be reached at 718-938-4601 if you have any questions or concerns. That's 718-938-4601. Or you can email me at Wayne at WScullyCPAPC. That's Wayne at WScullyCPAPC. Okay? Thank you guys. Take care. All the best. Catch you next time. Bye bye.